Good evening, everybody. I was going to say good evening. We got a nice cold rainy night here in Pittsburgh, which is typical. All right. We've got a perfect market to kind of coincide with what we'd already pre-planned is good. What improves the probabilities of analyzing the markets correctly and then improving the probabilities of maintaining a good profit in a good breakout situation. So kind of the first things that we can analyze, which is going to be kind of a promo into our mini spotlight training this coming Saturday, that we're going to look at about 5 or 6 indicators that are very confirming for identifying which way the a market trend is going, which then let's see, do I need to take notes? No, Dan, just sit and listen, and then Becky will have a link for everybody that had signed in. So rather have people listen and see what's happening on the charts. So as we can see, last week there was this big up day, which we said, that's not a market reversal, because that is not a signal. And the rationale for this being an up day but not a signal is that the Japanese rice traders have had 400 years of analyzing reversal signals. And that if that had been one, they would have told us what it was, described it, and given it a name. It's not anywhere. However, that did not dispel the possibility that we were in a fry pan bottom. Now, the reason we want to point out a fry pan bottom is, even though it might not have a very strong trajectory, it's telling us there's a buildup of investor sentiment coming into the markets. Now, one of the ways to analyze the direction of the markets is, what is all the indexes doing? Nice fry pan bottom on the NASDAQ, as well as the S&P 500. Well, the S&P 500 has even a more compelling indication. Notice it did a doji right smack dab on the 200. And what do we know about the doji rule? The doji rule basically tells us it's going to move in the direction of how they open after a doji. If they open this positive tomorrow, telling us they're trading positive, telling us this fry pan bottom is still working, and the 200-day moving average is not going to act as resistance. So this is all kind of common sense elements of investor sentiment. The second candle on the Dow chart, a shooting star. The second candle on the Dow chart, meaning this right here. I guess the answer to that is, where does a shooting star signal occur? Where does a sell signal most likely occur? When your stochastics are in the overbought area. So when we saw that move, what did we kind of anticipate? Well, we didn't have a sell signal confirmed yet, number one. Number two, stochastics were still heading up. Number three, we were still above the T-line. I guess I better ask this question so we can clarify what all the indicators are. How many people in here are new to candlestick analysis? All right. Vladimir Putin. Okay. All right. So let me find. I guess this is as good as any. There, as you can see, these charts aren't that complicated. That's because the most basic and most relevant factor on a chart is the candlestick signal itself. I use stochastics at 1233. So the Japanese logic is, if you see a candlestick buy signal in the oversold area, you're probably seeing a reversal. If you're seeing a candlestick sell signal in the overbought area, you're probably seeing a reversal. If you see a candlestick buy signal in the overbought area, it doesn't really mean anything. You see a candlestick sell signal in the oversold area, it doesn't mean anything. So everything that is built into a candlestick chart is just common sense put into a graphic depiction. So here are the indicators. The blue line is the 50-day simple moving average. The red line is the 200-day simple moving average. The reason those are on our charts is we don't use those to make our decisions. We use those to see what everybody else's decisions are. Those are the two major moving averages that every major money manager around the world uses to make their decisions about their portfolio. All we're doing is seeing what is their decision at those levels. The black line is the most important. That's the T line, the 8 exponential moving average. And this one is so powerful that here is the most compelling statement about candlestick signals. If candlestick signals are the graphic depiction of everybody buying and selling, or essentially the graphic depiction of investor sentiment, which works fairly accurately, I say fairly accurately, much better than any other technical indicator that I've found over the last 45 years. And number two, the T line acts like a natural support and resistance level of human nature, acts like it has Fibonacci characteristics. So when you combine those two, you've got a very strong probability factor as far as identifying which way a price move is going. So there's a very simple T-line rule. But if you see a candlestick buy signal and a close above the T-line, your probabilities are pretty strong you're in an upward direction until you see a candlestick sell signal and a close back below the T-line. If you see a candlestick sell signal and a close below the T-line, you're in a downtrend until you see a candlestick buy signal or close back up above the T-line. I've often told people, don't take my word for it, because it's not difficult to put the 8 exponential moving average on your chart and see how it works. And that's the nice thing about candlesticks, is we know that they work. Or like any trading strategy on Wall Street, if it doesn't work, it disappears very quickly. Well, candlestick analysis has been around for 400 years. So a lot of people ask, well, why isn't everybody using it? Because a lot of people didn't even know about it. I didn't know about it after being a stockbroker for quite a few years until somebody dropped candlesticks on my desk. And the one element that was so compelling was it made sense. Everything you saw in a candlestick chart makes sense. So anyway, that's the promo aspect of candlesticks. So I've also got the 34 on here. That works fairly well. Again, the most compelling aspect of a candlestick chart is the signals themselves. Everything that is put on after that is just confirming a confirming indicator. So here's again what our mini spotlight training is going to be on Saturday, is how do you recognize and get full confirmation of what a market trend is doing. One is obviously the candlestick charts. Two, there's about 5 other things that you can look at, and it's not like it takes 30 minutes to look at all the indicators that tell you which way the market's moving. It takes probably about, to look at all of them, no more than 90 seconds, because it's all visual. So one of the aspects of knowing not only the signals, the 12 major signals, knowing the patterns. And we know what the fry pan bottom pattern is telling us. There's a slow buildup of investor sentiment. It's either going to break out or fail. But during that time, since we know that the fry pan bottom is a slow buildup of investor sentiment, we also can pretty much calculate that there is no selling pressure or bearish pressure in this market. So how do we use that to our advantage? Because we know out of the 12 major signals, we can find the very strong ones, like a kicker signal. How much is it, or how long will this uptrend continue? Well, if this is a strong candlestick reversal signal and there's no selling in the market, more than likely this one will continue right on until there's either a reversal in the market or a candlestick sell signal on this chart. So one of your 12 major signals is a kicker signal. It is the most strongest of all signals. So anytime we see that, we can get rid of that, what do I want to say? Indication or inclination to say, oh, I don't want to be chasing this stock. I'm going to wait for it to pull back, which is most people or a lot of people's investment strategy is. We want to be buying. We're not chasing. We're going after a signal that tells us there's probably a lot more upside potential. So out of the 12 major signals, you've got a few very strong ones. And I should say this more concisely. Out of the 50 or 60 candlestick signals, I've already cultivated down to the best 12. And the reason those work well is because they're the ones that are going to show up 99% of the time. John, yes, these are daily charts. I'm a swing trader, so I'm looking at the daily charts. But candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether you're trading. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute combination. If you're a longer term investor, you might be using a weekly, monthly combination. Do you enter a kicker on the open or wait for an intraday candle? If you see, now, let's see, let's put it if I didn't see this happening during the day and I did my scans at night, let's go back to a kicker signal, and saw this, I'm thinking, all right, I could be buying this on positive trading the next day. But the nice thing about a candlestick chat room is everybody's looking for the same signals or patterns. So I might not see this, obviously, until the end of the day, unless somebody in the chat room said, hey, I'm looking at AGL. It's gapped up and trading positive, and I can see that it's doing a kicker signal. Well, I'll immediately go to my 10-minute chart to make sure they're still buying. So I can be buying, I can be buying during the day based upon identifying that signal during the day. But if I didn't, I know when to be buying based upon how it opens the next day. Yes, your scans work at night because your chart is done. Now you're just looking for the signals that, and we do teaching of that, how to find the best signals or patterns based upon, or how to scan for the best signals and patterns each day. So, what is one of your strongest signals? Your best friend signal, a doji followed by a gap up. What do we want to see? Positive trading. So if they've gapped up through the 50, and we did this for the members last night, where was our next target? Well, the next target is obviously what everybody else is watching, the 200-day moving average. Cynthia, yes. I usually add that at the end of the session of how do you set up your scans. And again, the nice thing about candlestick scans is once you set them up, you don't have to worry about them anymore. All you do is refresh them each day, and it will bring up the same, look for the same signals or patterns. All right, so that's what we're looking for. The signals that are going to work the best. So when we see something like this, where your best friend breakout of an obvious resistance level, when is it time to buy? Well, if the market is still telling us it's heading up, that means that pattern has that much better prospects of working. It's probably going to work even if the market is very lethargic and not crashing. But if the market's holding up and heading up, it's got that much better probability of moving in the right direction. So something like this, where you see a fry pan bottom breakout, this is what we kind of constantly teach in our chat rooms every day, is where do you think everybody's buying? When that pattern breaks out from where the pattern started. And a lot of people say, oh, well, shoot, should we be buying a pattern when we're up here in the overbought area? And the answer is yes. We're buying the signals when we're in the oversold area. We're usually buying the patterns when they're already up, showing the stochastics in the overbought. On the ones you said to buy on positive trading, you use a buy stop. You can, Jeff, depends on where you are. So let's say, for example, yesterday you did this on your scan. You can see the fry pan bottom. It broke out through the 50. It was just about ready to break out. But let's say, for example, you can't be sitting at your desk when the market opens. You're driving to work or you're on the first tee. You can say, well, if this trades up above X, I want to be a buyer because that's confirming. Are you constantly looking for the exit on the 10-minute chart throughout the day? What's your trigger for searching the exit? Your trigger for searching the exit is, I should have said the caveat of the T-line. The caveat of the T-line is you stay long until you see a sell signal and a close below the T-line, with the caveat being that if you're moving too far away from the T-line, the probabilities are you're going to come back and test it. So if you've all of a sudden have a big spurt in the overbought area, again, that all fits in with the philosophy of the Japanese rice traders. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. The T-line acts like that natural level that if you're moving too far away from that level, they're going to come back and test it. So that means if I see something that's moved too far away from the T-line, I'm trying to find one here. I'll have to point it out later. Then I flip to my 10-minute chart and say, right, well, I'm way up here above the T-line, so let's flip to the 10-minute chart. And as soon as I see a sell signal and a close below the 10-minute T-line, I start taking profits. The T-line is the 8 EMA. The 34 is the EMA, and then usually your 20, your 50, and your 200 are simple moving averages. Does this work? Day trading options, definitely. Works on stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. You said to buy patterns and buy signals. Can you explain? You said to buy patterns. Oh, the stochastics. You're buying the signals when they're in the oversold area. Usually when you're buying a pattern breakout, your stochastics are in the overbought area. So you use stochastics to tell you where you are on if you're buying a signal. You also can be pretty sure that when they start buying exuberantly coming out of a pattern, you're already in the overbought area. Does your scanner have the 10-minute Oh, oh, Cynthia, I don't know. Oh, yeah, any chart has not so much a scanner. I don't know how to answer that. Blue and black makes X. Explain, please. No, we got a ton of charts to look at, David. I try to answer things as fast as I can. Cynthia, I don't understand your black and blue. End of day scans, the 1 day movement. Yeah. As soon as the day ends, remember what a candlestick chart is, whether you're on a 1 minute, 5 minute, 10 minute, or daily, weekly, or monthly. It is the graphic depiction of investor sentiment. So your 10-minute chart at the end of the day is now worthless because the next chart or the next investor sentiment you're going to be looking at is 14 hours later when the market opens the next day. The black line is the T line, yes. The blue line is the 50-day moving average. I've heard you say if they make an X. Oh, if they make an X. If they make an X. I don't know what that means. If they make an X. Nah. All right, so how do we improve our probabilities? By recognizing a pattern, fry pan bottom, a breakout level, and a breakout level. If moving averages cross, we don't pay attention to that. We're not buying the moving averages. We're buying the signals. Oh, when the price crosses through a resistance level. Now we're seeing a fry pan bottom. What is everybody else watching? Everybody and their brother is watching to see what's happening at the 50. We can see that it's building up. So even if we're buying right here, we know the probabilities are pretty strong that everybody else is coming in. Now, so no, a cross doesn't mean anything. Now, a lot of people say, well, when the 200 and the 50 cross, can be buying. The most important factor on a candlestick chart is the signals themselves. All right, here, we can crank through this. So here was the rationale. If you know the market's heading up and you can see some very strong buy signals, you know the probability is still in your favor, but there's not going to be any great enthusiastic selling because the market's doing a fry pan bottom, which is a buildup of investor sentiment. So anyways, we're going to be kind of pinpointing that on the 14th. Now, we always promote these mini spotlight trainings as an hour, but as you can see, I like to talk. They usually last at least an hour and a half to 2 hours, so you get a lot of information in these things. All right, so let's go to live charts. Oh, Becky, do you have the link for signing up for that? Now, we got a real fancy-dancy promo going on. In 2 weeks from now, we're going to be doing a full-day session on all the major patterns, candlestick patterns. But we're going to incorporate it into also applying that information to how you analyze what the overall market is doing. That's a full day training. That usually goes from 10 in the morning. They're supposed to end at 2. They usually end at 4. And so here's our fancy-dancy promos. For members, it's 197. For non-members, it's 297. But the smart thing to do is become a member for $97 a month, or even if you just want to do it for 1 month, at least now you got 1 month of joining the chat rooms and the picks and the extra trainings that we do during the week. So you get the discount price of $197. On top of that is, if you do the mini spotlight training on this Saturday for $47, then instead of $197 as a member for the full day training, it's now $97. Abe will knock off $100 if you do the $47. So anyways, this is what we call the horseradish marketing. Horseradish marketing comes from H.J. Hines, that started here in Pittsburgh, and his marketing was when everybody else was using green glass and kind of hiding the lack of quality in their horseradish products, he was using clear glass so that everybody could see what the quality was, and then he would give everybody a sample to see that it was good quality. Yes, it will be recorded. CT, just yeah, if you need to, email Abraham and he'll get you all set up. So because H.J. Hines felt that his product was very high quality, that's why we call this the horseradish marketing, because everything that you're going to see on candlestick charts is just pure common sense. There's nothing tricky. It's just very plain logic by the Japanese rice traders. Yes, it will be recorded, so even if you can't stay through the whole session, either the first weekend or the second weekend, or if you want to keep reviewing it, yeah, that's going to be yours. I didn't hear your answer. Does this work? Yes. Les, it's not that you're trading options. Options are merely the piece of paper that controls the underlying stock. So if you're trying to buy something, Apple, Amazon, Tesla, you're not, and you don't want to be buying the stock, you're going to be buying the options. You're buying that piece of paper that says, all right, instead of buying the stock, I'm buying that piece of paper. A lot of people ask, well, do you have stop losses on your options? And the answer to that is, your stop losses are based upon what the underlying trading entity is doing. So if you're buying Amazon because it's going up, when do you sell your options? When you would look at the stock chart and say, oops, I'd be selling Amazon here. Let's close out the option position. So, yeah, candlestick signals aren't oriented toward any specific trading entity. It's oriented toward identifying what's going on in investor sentiment, no matter what you're trading. All right, so as we can see, we got a fry pan bottom in all the indexes, which is just that much more credibility that we're building up investor sentiment. I've got that one on here, David, so hold on. I've got a bunch we're going to be looking at. So let me just bang into these right away. There are situations where we call a rare situation, R-A-R-E, which means research analysis reverse engineering. So if we see a pattern breakout, look at our fry pan bottom, best friend breakout. Now, a lot of people say, well, I'm not going to be chasing this. Well, if you do the rare research, meaning research analysis, reverse engineering, all that means is you're going to go back and find out what the news was that created this move. Well, the move was created by the fact that they got a $175 million contract, which obviously for this little company was a big thing. So what do we expect from that type of move? At least a 45-degree. So if we expect that, what was the other one? Oh, this one. when we see that type of move, what is our expectation? 45 degree. Cynthia, on most trading platforms, I use Thinkorswim because I trade stocks, options, commodities. I can do it all out of one account. But you can also just click on news, type in the symbol that you're looking for, and it will tell you what the news was or is right now or over the past few days. So there's plenty of places on the internet where if XYZ has a big move, you can pull up XYZ and find out if there is a recent announcement. So this is our expectation, especially off of this signal. So what's the best way to trade this? Well, if we expect a 45 degree coming off of here, but we don't know whether it's going to move in this direction or this direction, maybe the best plan is do a bullish spread. You trade the pattern regardless of we. Rob, I don't know what a we is. Yes. Oh, of what the news is? No. If this was an upgrade by somebody, that is not a change of investor sentiment. That is just an alteration of supply and demand. But if this was huge earnings or a contract, big contract, or something, anything that says, "Oh, there's going to be more upside," yeah, that has a much different connotation than somebody just upgrading it. So here's a case here. So here's your perfect example of where do most people sell? They panic sell at the bottom. How do we know when to grab for a fallen knife? Because here's one of your strongest reversal signals, a bullish flutter kicker signal. A bullish flutter kicker signal is your kicker signal with that little flutter in there. But that becomes an alert, because notice where they opened this and closed it. Oops, let's make this even bigger. Then they gapped it up and did a doji. What do we know about the doji rule? The price is usually going to move in the direction of how they open after a doji. And if they trade this positive, if you took this little flutter out of here, what do you have? You have your strongest candlestick reversal signal, a kicker signal. Can I sign up for the workshop for this Saturday and get the recording? Yes. This session is in the, oh, that's right. Are you from Australia? All right. Yeah, the news. Remember, candlestick signals are the graphic depiction of everybody buying and selling. So whatever that news was, it's telling us exactly. Now, remember, how many times have you come across a situation where somebody just reported fantastic earnings and the stock dropped like a rock? Or terrible earnings and the stock took off? That's because all we're doing is identifying what everybody else was expecting and what their decisions were. Okay, let's zip along here. Now, you can also get some added credibility. Look at your fry pan bottom. We started buying QuantumScape again. As you can see, the little gap up. You can see that it came through a resistance level that everybody else was watching, the 50. So it was acting pretty strong. What was the other confirmation? Well, other stocks in that sector. Lithium mining stocks. We also recommended lithium. So it doesn't take very much to go through this many charts and see that Lithium American was acting well. Piedmont Lithium was acting well. So if they're all acting well, what's the assumption? Somebody big or everybody big is buying that sector. So what's your common sense stars in alignment? If the market's heading up and you can identify which sectors are acting the strongest, and then you can identify which stocks in that sector are acting the strongest, you're putting all the probabilities in your favor. And if you can identify which signals produce the strongest moves, you can get set up for situations like this, where you can see the best friend breakout, consolidation, and now look what's happening. They're continuing to take this one up further. Or, oh man, I gotta go take a handwriting course. There's your breakout on VRDN. We recommended that one. Based upon, you can see where the consolidation is, and then your best friend signal providing more upside. So I always tell everybody, this is not rocket science. This is just identifying, that's not what I want. Well, for crying out loud. I was going to segue. Oh, this is what I wanted. There's your bearish best friend. So if a bullish best friend tells you there's lots of bullish sentiment coming in, the bearish best friend tells you the exact opposite. That's a good position to short. Another kicker type signal. Look where your J-hook pattern started. Look where your breakout is. And look what happened today. This is called a trend kicker signal. Notice you're already in the trend. They open here, close here. The next day they gap it up at or above the previous day's open and go the opposite direction. That's an extremely high probability there's going to be more upside. If there's going to be more upside, what's that tell us about this level? They're probably breaking out, and now you're in wave 3 of your J-hook pattern. I'll try to go through some of these pretty quick. There was your gap up, gap up. Nice steady uptrend. Let's get rid of that. So what does this indicate? When they start gapping it up, that tells you they want to get back into that position with great enthusiasm. We recommended KOS because there's your trend kicker signal. And notice where your trend kicker signal occurred. Right here at a level that everybody was watching. So if that trend kicker signal implies there's going to be more upside, what's that tell us about the next resistance level? It's probably not going to be acting as resistance. You've got a good strong price move. I got this one that I'll bring back and show. But again, there was your gap up, still in a 45-degree, nice strong price move. Now that's data. So that was being bought because you can see what was happening to the China stocks. They were all being bought with great enthusiasm. Now you're in that 45-degree. Now I say 45-degree. How do you trade a 45-degree? You stay long as it doesn't close below the T-line. Now somebody was asking about, was it IMBT? Would you be buying this? Yes, there's one thing that through 3 decades of analysis, if you're in an uptrend, notice how where you would stay long on this uptrend. You stay long until you see a sell signal and a close below the T-line. Now you can see there's a J-hook pattern setting up. So if this starts trading positive, it's not unusual to see this as your trajectory, the J-hook pattern, and then this becomes your trajectory instead of this becoming your trajectory. You like to buy gaps. I always heard that you should look for gaps to fill. What's your thought on this? Yes, gaps usually get filled. They may not get filled this month or next month or this year, but a lot of people say stay away from gaps because you don't know what the price is doing. When you use candlestick signals and gaps, you know exactly what they're doing, and that's where you can take advantage of big price moves. What about the gap down in Lulu? It's been moving higher. Okay, real quick. Well, yes, so that's where you can use candlestick analysis to say they gapped it down, but what happened after they gapped it down? So if this had been a red candle, meaning they opened it here and closed here, they were still selling. Well, that you wouldn't categorize as your best friend signal because this wasn't a gap down bearish candle. This was a gap down. You could see they were already buying. We did the same thing over here on ENVX. They gapped it down. But notice what was happening. They were buying. So if we were buying right here, or we were holding positions that we didn't like being in, what was our first target? We wanted to see what would happen once it got to the T-line. Now remember, the T-line acts like a natural support and resistance level. So as soon as this hit this level, I don't know whether I can do this, but I will try. You flip to your 10-minute chart. Let me see. I think it was right here. But as soon as you saw it hit the T-line and come back through the 10-minute T-line, you took profits because what did that tell you immediately? It told you as soon as they hit the T-line, they were starting to sell. Now, why is that relevant? Because nobody has the T-line on their chart. Or statistically, nobody has the T-line on their charts. It acts like a natural support and resistance level. So when it started selling here, with nobody having the T-line on their chart, that's just another piece of evidence that this acts like a natural support and resistance level because that's where naturally the selling starts. Oh, what was the other one? So this is why the visuals of candlesticks tell you exactly when it's time to sell. You're in an uptrend, you're in an uptrend, you're in an uptrend. Then they gap it up and trade up through the 200. So not only do you have the capability of seeing when it's time to buy, but we know little indicators of human nature to tell us when it's time to sell. If you're up here in the overbought area and they gap it up, what's the Japanese rationale? Where do most people buy? They buy exuberantly at the top. So if you're in an overbought condition and they're gapping it up and trading higher, where is the logical place to put your stop? At where it opened, because logic says if they take it up and they bring it down through that level after gapping it up, you're more than likely going to get a sell signal. So what did this tell us once they got right to the 200? It was time to take profits because that's where everybody else was thinking about taking profits or did take profits. Now remember, the difference between all or a lot of other technical analysis is it kind of gives you an indication of what's happening at specific levels. The signals are different. They are telling you exactly what everybody's decisions are. They show you right away whether it's buying or selling. Oops, I'm getting off track here. So anytime you see the strong signals, humbug, how can you miss? It's because I did it wrong. PMRN. Anytime you see that kicker signal and a close above the T-line, that's a pretty good indication that you're in wave 1, wave 2, and what did this tell you? There's been a drastic change of investor sentiment. Get ready for wave 3. That's exactly what we did here on, whoops, EXAS. That kicker signal, right off the 200, gapped up through the T line, broke this level. Again, I used to sit as a stockbroker and say, I'm not going to chase after that. But once I started learning candlesticks, I said, wait a minute, that's a kicker signal. There's going to be a lot more upside. We can see that. And I mean, this isn't something that you have to guess at. Moderna, kicker signal, close above the T line. When did you sell this one? Up in this area, because look how far away you started moving from the T line and started taking profits. What happened here? Pretty bad hair day, but what was the final decision? They didn't close it below the T line. So not only did they not close it below the T line, what type of pattern did we have setting up? A J-hook pattern. What do we know about a J-hook pattern? Wave 1 and wave 3 are going to be pretty much the same. So once you know what a pattern is likely to be telling you, now you can make much more intelligent decisions without having your ego or your hope involved. And it works on all trading entities. I've been short hogs, because you can see what the rationale was. Look where the resistance level was. And what did happen when we got in the overbought area at the resistance level? There was a bearish harami. If it opens lower after a doji harami, where is it going to? Probably at least back to test the T line. Once it gets there, what do? See whether it bounces up. If it doesn't, you stay short until you see a candlestick reversal signal. Now, is that a reversal signal? That's your long-legged doji in the oversold area, pretty far from the T line in the oversold area. So if you're short, what's your strategy? Well, if this starts trading positive tomorrow, you start taking profits because you've got a long-legged doji in the oversold area that far from the T line. At least kind of expect a bounce back up to test the T line. Or if you want to be aggressive, you start buying and so then see what happens once it gets to the T line. So you can trade anything. Oops, I don't even know what the US dollar is over here. You can analyze which direction gold is going. You can analyze which direction silver is going. Obviously, completely different from gold. Soybeans, the dollar, the yen, whatever you want to trade, it's going to show you what that trading entity is doing. So again, this is not rocket science. This is just taking the information the Japanese race traders have produced over hundreds of years of analyzing. Oh, here's what I wanted to show. Let me go back. Here's something that's very relevant. Look at this up day right here. Now, I told the chat room, don't go long with any great enthusiasm because that is not a signal. The reason that is not a signal is, or a relevant up day, is the Japanese race traders have had hundreds of years to analyze all these signals and patterns. If this was a signal, the Japanese race traders would have described it to us, told what that signal was, and what the ramifications were. The fact that there isn't anything about this being a reversal signal immediately should tell you, oops, this is not a reversal. This at best may be a bounce. Now this one, your bullish engulfing, even more specific, your left-right combo, a doji followed by a bullish engulfing, and a close above the T-line, that was much more indicative that there's been a change of investor sentiment. And another additional prospect to that signal is it's doing a double bottom. So That not being a signal is relevant, telling you it's not time for a reversal. That one being the signal is telling you, yes, there's a reversal. Now, look where they started taking profits, right here at the 200. Why would you get ready to buy back? Because notice on the pullback where it didn't close. It couldn't close this below the T line. That gave us a lot more visual credibility to say, let's get ready for a bobble breakout or a J-hook pattern. A bobble breakout is just a very more concise J-hook pattern. If you took the 200 out of here, you can see that's a J-hook pattern. The fact that you can see it resisting at that level and coming up through that level, that's even more compelling because we're watching the J-hook pattern set up where everybody else is watching to see whether they're going to trade back up through the 200. So we go through a lot of these top-ranked signals and patterns that basically tell us which signals and pattern setups are the strongest. SIBM, you can see where it failed right here at the 50 and then came back up through. Now, why is that important? Because we're watching the J-hook bobble breakout where everybody else is making their decisions of, well, if it comes up through the 50, I'm starting to buy, because everybody knows you should be buying if it's coming up through the 50. We're buying because we can see the pattern set up and we know everybody else is going to be buying coming up through the 50. Tree. Is this what I wanted? Yeah. Look at your bobble breakout. And what happens when everybody else sees that it's coming up through the 50? They're piling in. So this is another extremely high probability trade setup. Is the large bullish engulfing candle more important because it engulfs? No. The 4 previous candles instead of just previous day? No. Number one, it's because it is a signal. It's a large bullish engulfing signal. 2, there's another facet of candlestick analysis from the Japanese rice traders that say the bigger the signal, the more compelling there's been a change of investor sentiment. Yeah, so on that day that we were looking at, yes, that told us that there was a major change of investor sentiment. That could be a hanging man in the overbought area. So what would we not want to see? Or if you were long, where would you set your safety stop? Right there at the low of today, because if they came back through there, where do you think they were heading to? They're coming back to test the T-line. On tree, would you place a stop? Yes, right at the low. Now, that doesn't mean we're over yet. That means that's probably a place that tells us that's where we want to be out of the trade. Anything trading above that tells us we're probably still in an uptrend. And that's also going to be a function of where the market is. Okay, let me take... I'm way behind schedule. Well, we're way behind schedule. Get your coffee out. All right, so here's the logic. If we know a J-hook pattern is a strong price move with a pullback, in this case, when they go up through a resistance level, where do they come back and test? They come back to see if that resistance level is going to act as support. We can see that it did with a bullish candle. Now, where's a good place to be buying this? Anything above that level, because if they trade back up through this level or a positive trading tomorrow, you can be buying immediately, because what is our expectation? Wave 1, wave 2, wave 3 of your J-hook pattern is going to be the same magnitude as wave 1, with the additional evidence that it's supporting at a major support level. This is what we call a J-hook plus, where we can see the exact support level. That was also illustrated over here on AMAT. We made some very good profits here because it came up, pulled back, and then notice what happened right here. Morningstar best friend signal That's your J-hook plus, which means everybody's buying because they saw it, they supported at the 50, gapped up again above the T line. Where was your next likely target? The 200-day moving average. Okay, the biggies. Netflix. Whoops. Ever since the kicker signal, you're in an uptrend. Now you've got a doji hanging man in the overbought area. What do you want to watch? You want to watch to see if they're going to trade this positive. If they start trading this lower and you're long, you might start taking some profits. Where could you buy back? If it came back up through that level, that would tell you this level is not acting as a resistance. Can you look at futures chart and see what you think? On milk, I've never looked at milk. Let me see if this works. DLG 23. DLAG 23. No, that's not coming up. Sorry about that. DLG 23. Huh. No, I'm sorry. I've never traded milk, so I don't even know what the symbol is. I'll have to look it up for next time. Okay, Apple. Not a good strong reversal, but a fry pan bottom. Amazon. That was a bullish engulfing gap up with their doji sandwich. And then look what happened right here. Not only did they go through the resistance level, but they gapped through the resistance level, which told us they weren't concerned about the 50 being a resistance anymore. Good strong indication. Tesla had a good strong chart. This is your left-right combo. Left-right combo is your bullish engulfing, but your previous days of doji. They gapped it up. Tells us it should be in an uptrend, but it's not very resilient right now. So where would you set your stop? Right below the T line, because if they came back down through there, it's not going in this direction. At best, it's going this way or this way. Is today's candle on Amazon a hanging man? No. The true hanging man has a tail that is 2 times greater than the body. That's not 2 times greater than the body. However, you know how they opened it and traded lower? That gives you at least a good indication of what you should be doing the next day. Tomorrow, it better open and trade positive. If it opens and especially comes down through here, what's it doing? It's probably coming back to test the level that was a resistance level to see if it's going to act as support. A hanging man is a hammer formation, except a hanging man occurs in the overbought area, whereas the hammer is a signal in the oversold area. So NVIDIA kind of broke out here. So what do you do now? You just watch to see whether they can get through the 200. I'm going to just take a quick look here. And, yep, the aftermarket futures are off 20 on the Dow, which doesn't mean anything. Okay, so we have charts that look like this. There's your breakout. This stock went from 5 to as high as 55. Now, up here, where are you compared to your T-line? Look how far away you are from the T-line. I doubt if I can find this, but I'm going to try. Somewhere back here. on the 10-minute chart. I'm guessing on this day when it went from 32 up to the 55, if you were in this stock and you saw this happening and your daily chart was showing you you're way up here, way away from your T-line, where do you take profits? Right there. Because that tells you the probabilities are that's where the bulls and the bears have met resistance. So how do you know to come out up here even though you don't have a sell signal yet? Because of the distance you are from the T-line. Everything, again, built into a candlestick analysis just puts you light years ahead of the investment philosophies that are usually touted by Wall Street. So here's an added benefit of knowing what's happening on this chart. There's your fry pan bottom, there's your breakout through the 50, and then look what they've done for the last couple of days. They come right back to the 50 and bounce it back up. They came right back to the T-line and bounce it back up. When they do that, that's a good indication that the bulls are still in control, you're still in an uptrend. Okay, I'm going to try to crank through some of these real quick. Whoops. Oh, dang Jiminy Christmas. Okay, so these are J-hooks. A J-hook's very easy to identify. Wave 1, wave 2, and now this is also why you want to know what the nature of each signal is. Notice indecision, 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 to when? To where they came back to the T-line, and when they started buying, what's your calculated move from this point? Well, if this is wave 1, wave 3 is going to take you up here somewhere. Let's see. IM VT. Again, there's your J-hook pattern setting up. What's your risk reward here? Well, if the expectation is this is a J-hook, your trajectory might be like this versus like this. So you could be buying this with watching to see what happens right here at that resistance level. IMAB. Where did this J-hook pattern set up? Right smack dab off the T-line. Where do you think the next likely target's going to be? Wave 1, wave 2, wave 3. All right, and your high probability trades are based upon, I missed this one today. I had this one all set up and I forgot it. Look at your kind of your J-hook bobble breakout. So when it closed here and opened here and started trading positive, what should that have told us immediately? That this pattern was working, that J-hook pattern was working, and what did we know would probably be the result of that pattern working? Well, everybody and their brother that saw that this was now trading above the 50s started piling in. Yeah, and it has options, I think. Yep. All right, and ADCT. There's your bobble breakout. Look at your fry pan bottom, bobble breakout, and notice when the fry pan bottom bobble breakout occurred, what happened to your percentage return? Well, this went up almost 100% in 2 days. So this is why we want to be able to identify not an uptrending stock in an uptrending market. We want to find the ones that are going to move the fastest, and those are the ones that are going to come out of candlestick patterns. Here's another bobble breakout. Where's your next target? At least up here to the 200, which may not be that far away, but for all we know, once we get there, we see what they do at that level. And INDO. There's one that has just broken out. So what's the trading strategy here? Notice not only did it break out with kind of a bobble breakout, but look what it did today. It gapped up from a doji through the resistance level. What's that imply immediately? There's a lot more upside. Where do you think the next likely target is if they broke through the 50? Up here. That could be a good hefty. You're probably going to see that on the recommended list tomorrow. So anytime you see that breakout of a potential resistance level coming out of a pattern after a strong buy signal, the probabilities are they're heading to the next target. So we're sitting in a market that has tons of, boy, I'm already past 9 o'clock, tons of breakouts of fry pan bottoms. And look where this fry pan bottom supported. Right smack dab off the 200 with a doji, off the 50. And look did that. Look what's occur when you get near the end of these patterns. Should one respect a 30-minute chart T-line or only use a daily T-line? John, the logic is the first analysis you want to make is what is the daily charts telling you? So if the daily charts are telling us we're in an uptrend, yeah, if you want to trade it more specifically, then you can drop down to your 10-minute or whatever time frame you want to use intraday. All right, thanks, Jamela. Should we worry about the stock reversing based upon the number multiple times testing the T-line? We worry about a stock reversing based upon more times testing the T-line. I don't know how to answer that, Rod. Look how it, on this chart, whoops, how many times it used the T-line and bounced up. Now remember, nobody has the T-line on their chart, so it's bouncing off a level that acts like a natural support and resistance level. Same thing on the downside, that every time they come up and fail at the T-line and close back below it, pretty much implies the bears are still in control. All right, I don't want to get everybody bogged down here. IMGS, another fry pan bottom breakout. Now the reason, again, we want to know what the patterns represent is because they're going to produce the big price moves. I guess the other way to say it is you're going to see a lot of uptrending stocks in an uptrending market. We're looking for the ones that have the explosive upside potential, or basically we want to make hay while the sun shines. I don't know why I got that one on here. Oh, because I typed it wrong. EWTX. Look where this bounced off. What's that imply? This is what you call the classic pattern. A fry pan bottom followed by a J-hook pattern. Can you please check this again? Did I not do that right? Or did I type it wrong? EOG. No. DLAG23. Let's try this. DL. That's the DLH is the euro. Are you sure that is the right symbol for milk? Oh. Gary B, are you in here? Yeah, that's the D. All right, one more here. No, I'll have to look it up. Try DC. F dot DC. Nope. Yep, sorry about that. You did bobbles. All right, so here's another facet of investing. Where is everybody buying? Right off a support level. ANNX. RVMD, a bullish left-right combo, right smack dab off the 50. And what else did it do? So what, just kind of observe the obvious, that it broke through that resistance level, giving you a high probability of the next strong price move. HBM. Well, no, that's just not right. HBM. Now, same scenario. As soon as it hit, so this is the same analysis of human nature. If you're an institution and you're getting ready to buy this, or you're coming in and you want to buy a bunch of stock and it's drifting, where do you think you're going to wait to see if it supports? Right here. And that's the whole aspect of candlestick signals. I don't know whether that comes up. I'm going to give it one more shot. Nope. I'll try to find milk before the next session. So this is obvious that that's where everybody is buying. That's why we bought data right here. Because what is our risk reward if we're buying right here? Well, if it all of a sudden turns around and closes back below the T line, we close out the position very, very quickly. DCS 23. Nope, that one's not working. All right. Okay. Real quick. This is where, when you can see that flat trading, kind of your cradle pattern, telling you that's where the support was coming in. And that's based upon identifying these type of signals or patterns. Lots of indecision. Now you can see what's happened. This, what was the downtrend, the T line, now you are trading up back up above it. Okay, if that's the way the TOS has it, I have to go to, this is CQG, which is basically the grandfather of all charting services. I'll have to check with them and see what the signals are. All right, so Myra, fry pan bottom, Riot, kind of a scoop pattern. SRRK, kind of a fry pan bottom, and look where it kind of broke out right here in this area. And notice the pullback again is very indecisive. RNA, J-hook pattern. Look what happened here. Your kicker signal, your evening star signal, your morning star signal. A pretty strong buy if this opens positive, especially if it trades back up through this level. Yeah, you also have to be careful of some of these. I used to trade orange juice, lumber. So there's a lot of commodities that trade very, very thinly, meaning very small volume. That's why I usually stay with hogs, cattle, soybeans, the dollar. I want to be able to get in and out when I want to. ICPT, you can see where this broke out. The option bid and ask spread is very large, yes. If you are looking at a trading entity that may only trade 400,000 or 500,000 shares a day, you might have difficulties finding options that have enough volume. So if I'm trading options, I'm going to find ones that usually trade at least 1 million shares a day. Now, if there's something I really like, and they're bidding $2, asking $2.90, well, that's a pretty big spread. So my strategy through the last 30 years is I'll put my bid in at the halfway point. Forget what that would be, 245. Well, if it sits there for 5 minutes and they don't hit it, and I really like it, maybe I'll move it up to 250 for another 3 or 4 minutes. If they don't hit it then, that means there's not enough volume on that trading entity to try to get in and out easily. Because why are we in the business of investing? To make money. If the playing field doesn't allow us to make money, move on to something else. I always tell people there are 9,500 trading entities out there. If you can't make money on one, or it's harder to make money, move on to one. There's another one out there. You can see what happened to American Airlines. Nice fry pan bottom breakout. Zyme. Oh, that's apparently not the right Zyme. So I'm going to speed right along. Haynes. Look at your fry pan bottom breakout. ALT. Here's your J-hook pattern. Where are you sitting right now? Right there. What's that tell us? This opens positive tomorrow. There's a good possibility you're now in wave 3. And look how this one's starting with your doji sandwich. The doji sandwich, the bullish candle, and a doji. And what's our doji rule? The price will usually move in the direction of how they open after a doji. When they do, this candle right here is usually the same magnitude as this candle right here with your doji sandwiched in between. And what's the implication of that? There's going to be more upside. Okay, on the short side, even if the market's heading up, it's always good to have a few shorts. When they're gapping something down on a bearish kicker signal, you could still be shorting this one. Excuse me. That's not anywhere close to it, or is it? What the heck? Maybe they sold off after hours or something. Let me go speedily on to the next one. Well, this is not working out well because I did it wrong. TWNK Twinkies. Here's your bearish dark cloud. Here's your bearish J-hook pattern. Wave 1, wave 2, going into wave 3. And DGX, bearish left-right combo, bearish left-right combo, bearish left-right combo. All strong sell signals. Who's winning the battle? Obviously the bears. Where do you think your next target's going to be? Down here. And TG and A, bearish kicker signal. Did I skip the, apparently I did. CRTX. Oh, that's bouncing up off the support level. But we recommended ELF last couple of days because of the strong downtrend, and TNAB because of the bearish kicker signal. So you don't necessarily, if you're trading, and you don't necessarily have to be 100% long or 100% short. There's always going to be some good shorts in that market. There's always going to be some good strongs in a bear market. And I know there was a couple more, and I forgot what they were. So anyways, the reason we're showing different trading strategies is because of a new term called clerics. A clerics is somebody that has that special innate ability to recognize something that they do well. Elton John, I give as an example that when Barry handed him words, Elton John had the capability of turning those words into the right music and the right tone of voice, making them hits. I contend that everybody has that little bit of what we call clairism, which is a derivative of clairvoyant, some aspect of investing that will sink in and they can do very well. It might be buying stock with option combinations, buying spreads, buying credit spreads, something that each person, when they find it, know they do it very well and don't have to depend on everybody else telling them what a good trading strategy is. So that's why we show people a lot of high probability setups based upon candlestick charts, because the basis of candlestick analysis is it has high probability results. That's what the Japanese race traders have illustrated for us over hundreds of years. So anyways, that's about all I've got for tonight. Just want to remind everybody you get a lot of information on Saturday on how to analyze market reversals and what the indicators are that can kind of confirm. And then we're going to go through a full day session on patterns on the 21st, which is taking those combinations of patterns and building them into market trend analysis, and then applying them to the signals or patterns that are working during that time frame. Can gapped up, then doji family moves with can. Is that a symbol? Hold on for your signals here. Yeah, so now you have to, oops, it's gone up through, and notice how it actually uses the 50. All right. Okay. Are there any general questions on candlesticks? Since the stock market is closed Monday, will there be an 8 o'clock class on Monday for members? No. We move it to Tuesday night. Yes, you can sign up. John, the only difference is that if you had a question while you're looking at it, obviously you can't ask it right at that time. However, as you know, I'm always available on my email. I'm always available in the chat rooms. You can ask, if you have a question, you can bring it up anytime. The light green line is the 3T line, and that's just a whole different category that it's got two functions. One, if you see the 3T line come up through the T line, that's kind of confirming the reversal, and the further away you move from the T line, the more relevant the 3T line becomes. It also acts like a natural support and resistance level of human nature. Do these technicals work for after hours trading? Not on stocks, maybe on the Forex or currencies by themselves. But remember what the candlestick signals represent. They're the graphic depiction of everybody buying and selling during a specific time frame. When the markets are closed, if Apple trades 14 million shares a day, maybe it trades 40,000 after hours. That is not the the decisions of everybody trading. The 3T line is a 3 exponential moving average, yes. And it works as an additional confirmation. Another confirmation is that if you're in an uptrend and they aren't even closing below the 3T line, let alone the T line, it tells you there's still a lot of bullish force in that price move. Okay. If no more questions, Rick, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay. Space had done a nice, strong fry pan bottom breakout. You see how it came up through the 50. You could be buying this one on positive trading with the expectation that it's going to break through this level. AMD is good. You can stay long. Micron, not quite as good. It's still in an uptrend. And AMAT, definitely need to see this trade positive tomorrow. Coin. Coin, you could be buying this fry pan bottom on positive trading. Now that they've shown that the 50 is not going to act as a resistance. Annex, you could buy based upon the scoop type support level. Look for a slingshot effect to the upside. And Kodiak, this one has to open positive and trade positive to give you a J-hook pattern. If this opens lower tomorrow and you're long, you close out the position. DAPP, another one that used the 50 as support, trading higher on the fry pan bottom. Again, the prospects of fry pan bottoms are big, strong price moves. Wriggle, just stay long. Use the T-line as your stop. GXO, another one where you can stay long because of the gap up through the 200 on a fry pan bottom breakout. Good looking chart. Juggly, nothing yet. I mean, you got a fry pan bottom setting up. Oh, and you're at a 27 cents. So make sure if you're trading this one, it's got a heck of a lot of volume. Like 1.5 million plus. And Labu, you can see the fry pan bottom. You're right here at the breakout level at the 200. You could be buying this one on positive trading, or at least knowing that the biotech stocks are acting well. You can go see which one of the biotechs individually have good, strong charts. Costco, ever since your kicker signal, right now you can stay long. I would stay long, but I'd have a safety stop below today's low, because if it came back through there, it's not going this way. It's coming back to test the T-line. Dino, that one is not doing anything great. Sinclair, it's supporting, but what do you want to see coming out of a fry pan bottom pattern? A strong breakout, telling you the bulls have stepped in. Whoops. Macy's hit the support level. It's not a very exciting stock to trade, but I would factor that at least your first target is up here to test the highs right now. Yeah, Richard, you could buy this one. Again, it's just not a big percentage mover. Are you copying recording now 4? Roger, you got me there. UH or UTH R, dumpling top, you just stay short. Oh, Terry, you were ahead of me. Sorry about that. Yes, stay short on that one. XLF, the financials, just stay long. UXIN, just stay long. Use the T line as your stop. Average volume too low. I don't know, what is the volume on it? XIN. It's fairly low, except it did have good volume today. So just be careful of volume. On non-big volume days, it's relatively low. But then again, that comes back to the concept that there's 9,500 trading entities. If you've got something that's acting as a deterrent, like low volume, move on to something else. How? Fry pan bottom breakout. At least figure your next target is up here at the 200. Occidental. You could be buying this one. Yeah, the oils are starting to come back up a little bit. Apache, not anything great. And crude oil, and not anything there either. You're just kind of sideways. Oh, Pshaw, what is that? Where did that come from? CERT. CERT, I'd be ready to buy this if it comes up through the 200. Wouldn't buy it before then. COGT, nothing wildly exciting. You can see you're kind of in a sideways mode. Or a better way to say it is, there's probably a lot better places to have your money. That's just a sideways chart. Oh. This one you stay long, but notice that you've done a doji right here. Makes it very easy. If this opens lower tomorrow, that's telling you they're failing at this level, take profits. You can always buy it back if it comes back up through that resistance level. Westlake, just stay long. Notice your Morningstar gap up. Now you've broken out through that level with kind of a doji sandwich. You just stay long until you see a sell signal. Carvana broke up through the 50 today. Whoops. Get rid of all of those. So you've got kind of a fry pan bottom. You could be buying this one. Just make sure it doesn't close back below the 50. Whoops, more here. All right. Well, shuzzbutts, what the heck is going on here? BBAL is not coming up. The SPY needs to open above the 200 tomorrow. And BKKT, this is where you use your rare, find out what the news was that created that move. See if that news is going to create more potential upside. HUSA, another one you could be buying if it gets up through the 200. All right. ALLO, yes, you can go long, expecting the target of the 50. And one more, AEP or EPD. Yeah, you're up here in the overbought area, dojis. you stay long, but I'd put a safety stop just below today's low. If it came back through there, they're telling you they're not going to stay up above the 50. And Bloom, your gap ups, same scenario right here. I'd have a safety stop at today's low. All right, everybody, I kept you way past bedtime. We'll see you, well, Slumberger. Just stay long. Halliburton, just stay long. All right, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.